that's another reason why I think we're still in the middle of an extended bull cycle that has its most powerful leg to come. And that's because, well, first of all, gold has been outperforming silver this entire run that we've had, right? Well, silver has started to outperform gold, but the gold silver ratios, has recently been as high as 90. And at the top in 2011, it was down to like 30. I'll get excited when I start to see it go down to 50 or six, go down to 60, because then I'll be like probably going to 50 and then 40, and that'll be part of this last powerful leg up higher that we have.
Dave Kranzler, a renowned hedge fund manager, precious metals analyst, and author of the Mining Stock Journal, believes we are right in the middle of a precious metals bull market that started in 2011. According to the renowned analyst, gold and silver prices are about to have another leg up, bigger than what we've had in the past few months. Kranzler says one of the clear proofs of the coming rallies is the current gold-to-silver ratio. As of press time, the current gold-silver ratio is above 83, down from 91.99 in July 2022, but considerably higher than the lows in 2011. According to Kranzler, the gold-silver ratio is a great way to predict upside and downside moves in both assets. The precious metals analyst is certain that during the next leg up, silver prices will begin to outperform gold, as it almost always does in bull cycles. When that happens, the gold-silver ratio will sink. Kranzler expects the ratio to drop to 60 or even 40. Another proof of the coming rally, according to Kranzler, is the performance of mining stocks over the past year. With gold prices currently close to their all-time highs, investors expect mining stocks to be as high or close. But their performance, especially junior mining stocks, have not been as expected. Kranzler believes we will see a reversal of this trend within the coming months, and gold and silver prices will also begin to soar. Kranzler recently appeared on the Palisades Gold Radio, where he discussed his price predictions for gold and silver prices and how gold is about to replace the US dollar as the world's reserve currency. We will now bring you some clips from the insightful discussion. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Also, ensure you drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm, so we can continue to bring you these videos. Thanks, and enjoy the video.
What do you think the next steps are for that gold to become part of any type of monetary system?
I think it's happening now.
Mhm.
I think it's happening now. It's not going to happen all at once, right? Because, and I figured this out 20 years ago, because I remember back then, everyone used to say, including me, why doesn't China just go in and buy up all the gold and silver on the COMEX? It would be, it would be a penny in the PBOC bank in terms of cost for them to do that, right? So, but if you think about it, they don't want the dollar to collapse right away. They don't want, I don't know if they really want the dollar ever to collapse, because look at, that would be like shooting themselves in the foot. I mean, they still own what, 1.1 trillion worth of treasuries. So if the dollar collapses, that's a $1.1 trillion loss that they take. And they don't want that. I mean, they've been slowly divesting themselves of treasuries, and they've been using a lot of that capital to buy gold, buy silver, buy hard commodities. I mean, they're the ones, for the most part, that drove up the price of copper. You can see it on the chart. They did it, I think it was like in 2006. Again, this is from memory. I haven't looked at the charts recently. But like, say, 2006 to 2008, you had a bounce in the price of copper. That was Chinese buying. And a considerable amount of the price rise that we saw over the last few years, I mean, yeah, there's supply and demand dynamics, but part of that is being driven by the enormous amount of base commodities that China's been buying. But at any rate, I mean, it just looks, it appears as if the Eastern Hemisphere bloc of countries, and also several South American countries, right? The BRICS, but there's other countries that are starting to jump on board. It appears that they're working on some type of alternative monetary system. And I don't know, I've read analyses that suggest it's something that might be rolled out this year, but we are starting to see all of these countries start to not use the dollar in their bilateral trade, right? I mean, the most high profile one is Xi Jinping going over to Saudi Arabia and meeting with MBS. MBS refused to meet with Biden. when Biden went over there. It was a total embarrassment for this country. And shortly after that meeting, Saudi Arabia announced that it was looking into doing oil trades with Russia that would settle in yuan. Mm-hmm. And I know for a fact that the United Arab Emirates is settling their oil trades with several countries like India in their currency, the dirham. And that's what's happening. We've seen South American countries, I can't think of the specific ones off the top of my head. I know Brazil announced it, and there's been a couple others that have recently announced it that said they're going to start using their currency with the counterparty country's currency when they do bilateral trade, right? And so that basically takes the dollar out of the equation. Mm-hmm. And it's coming, and again, it's one of these slowly then suddenly phenomenons, and it's been happening slowly for many years. It's started to speed up, and the U.S. actions with respect to sanctioning Russia and freezing their assets that were held outside of or in Western central banks, that basically triggered an acceleration of this process to kind of de-dollarize the world. Mm-hmm. And again, I'm not saying that, or I'm even advocating that the dollar is going to go away. It's just not going to be the reserve currency, and that's going to cause a massive economic blow to this country. Mm-hmm. Because that's a big part, if not that in the military or what's been the basis for the U.S. to maintain its lifestyle and its wealth over the last 50 years.
For decades, the United States has held the revered position of being the world's superpower, and its currency, the world's reserve currency. Whether it used the status prudently or not is still up for debate, but things are changing drastically, and challengers are rising in several regions of the world. For example, the BRICS alliance, Brazil, Russia, India, China, and South Africa, has made no bone of working tirelessly to overthrow the United States as a superpower and the dollar as the world's reserve currency. With its powerful members and equally powerful allies like Saudi Arabia and the United Arab Emirates, there's a significant chance that it might succeed. If it does, we would be ushered into a new era, an era where the dollar, the main source of the strength of the United States, is not as relevant or as recognized. And considering how BRICS nations and their allies have been piling on gold for the past year, it would be a gold-backed era. Let's get back to the interview, as Kranzler further discusses his predictions for gold, silver, and mining stocks.
Since let's call it 2011, I looked at a chart recently, but for sure for the last 5 or 6 years, and just use GDX as the proxy, GDX has underperformed gold and I believe silver. I saw a chart recently, and I've done these charts myself, but don't update them all the time. But I saw a chart recently, and it showed the price of gold compared to GDX, and the mining stocks have definitely been underperforming the price of gold. Part of that, I think people are, retail investors who are a large portion of the investors in the junior project development mining stocks. A lot of them got burned and have been burned over the last 20 years. And so I think there's a little bit of reluctance in that investor segment. Another aspect of it is in the run up from 2001 to 2011. And my thesis here is that we're in a secular gold and silver bull market that's punctuated by some bear and bull cycles. And so we had a bull cycle from 2001 to 2011, mm-hmm. and we had a 4.5-year bear. And now we're, in the middle of another bull cycle, because certainly price of gold and silver, and I think, and the Amex Gold Bug Index and GDX are above where they were at the end of 2015 or 26 at the end of 2015, mm-hmm. when this bull cycle started. So, if you just say, okay, we're in the middle of a bull cycle, and maybe we're halfway through, maybe a little more than halfway through, but we still have, say 4 to 7 more years to go, we're going to start to see the best price increases for gold and silver in the mining stocks, say over the next 3 or 4 years. But so the reason why I bring that up is back in the last cycle from 2001 to 2011, after 2008, you started to see large general mutual funds pile into the mining stocks. Fidelity had a couple generalist funds that became huge buyers of mining stocks, as did several other, big money management companies. And we haven't seen that yet. However, to debunk this idea that the mining stocks have been terrible lately, and I just ran these charts yesterday because I wrote about it in my mining stock journal that gets released this afternoon, and I discussed it in another podcast. But GDX between the end of September 2022 and the beginning of April rose 62%. Now that probably shocks people because they say, "Oh, well, I'm in, XYZ stock and that hasn't moved." Well, you're right, because you're probably in the junior, as I am, you're overweighted in the junior development microcap stocks, under 500 million, for sure under 100 million market cap. And those stocks haven't really moved. Some of them have, some of them have, like I'm a big owner of Viva Gold, and it's one of my strongest recommendations in my newsletter. And Viva Gold has gone up over 60% in the last, I don't know, 5 or 6 months. Mm-hmm. So there are some stocks that have moved. And so if you feel like you haven't been participating in any of this, you got to look at your stock selection. Mm-hmm. Okay. Gold was up in the same period. Gold, again, well, these numbers are off the top of my head. Gold was up, I think, 24%. Silver was up like 35%. GDX is up 62% over that time period. Mm-hmm. That's a phenomenal rate of return over a 6-month time period. If the S&P went up 62% in 6 months, they'd be doing naked cartwheels on CNBC and Bloomberg TV.
According to Kranzler, there are currently lots of opportunities to snap up in the gold and silver mining stock sector. However, the precious metals analyst cautions that only a small percentage of junior mining stocks will amount to anything after the rush and euphoria wear off. To make the best decision for your portfolio, Kranzler says to ignore whatever is coming from mainstream media, or at least learn to filter the many, many lies from the few truths. He also advocates following trusted precious metals analysts and renowned stackers, of course, while also doing your due diligence. What are your thoughts on Dave Kranzler's predictions for gold, silver, and the US dollar? Please drop your comments and observations in the comments section below. Also, ensure you smash the like button, subscribe to the channel, and turn on post notifications for more videos on gold, copper, and silver. Thanks for watching our videos.